You seem very upbeat. The outlook seems positive, especially for the investment bank. Give us a little bit more detail.
Well, overall, we are satisfied and we are happy with the progress we've done over the last 5 months. In all key dimensions, we are on plan. And some of that we are ahead of our own plan with regard to the transformation, be it cost, be it capital. Look at the ECB decision from this morning or from yesterday, that they lower our capital requirements. That gives us further comfort. And yes, revenues, in particular in the investment bank, are encouraging. Sales and trading in the fourth quarter, in October and in November, is doing well, ahead of our expectations. And so I can see a momentum in the bank across all dimensions, and that gives us the right comfort that we are on track with our transformation.
Falling revenue has been the headline until now. Do you see that turning around in the fourth quarter? Will investment bank revenues rise?
Again, we have seen an October and a November which was ahead of our expectation and which was ahead of last year. Now it's almost mid of December, so we have to wait. But all I can see is that I'm positive and I'm encouraged with the momentum we have. I think we took swift management action, in particular in the investment bank, to focus on our key strengths, and that seems to pay off.
What changed? Because it's been a few quarters since you've been trying this. So what was the difference in this quarter that's improved your outlook for the investment bank?
I think it's all about corporate clarity. I think it's so important that people know on what we are focusing. We are now with more than 70%, almost 75% of our investment bank revenues are coming from businesses which are top 5 in the market. And if you make clear to your people that we put our resources, our focus on that, in my view, that gives an internal clarity and also an internal comfort, which is a high motivation for our people. Secondly, we see a lot of good client engagement. Issues like a tightening CDS, which we have seen over the last 5 months, is also bringing back clients and client engagement. And then with the focus which we have internally, that all plays together. So the vote of confidence from clients, the vote of confidence from regulators, and the internal progress we are doing is all playing into that better momentum.
Speaking to employee motivation, obviously pay has a lot to do with that as well. Is it difficult to balance the cost cutting with giving the right size bonuses to those employees you want to keep?
I think it's always a performance question, and we always said that we want to pay appropriately to the performance. That's our goal. Of course, we have our cost challenges and our cost-cutting program. On the other hand, we are always measuring the business according to their performance. We need to strike the right balance, and I'm optimistic that we can do this.
You have said in the release today that your profitability target, although you're keeping it through 2022, has become more ambitious. What does that mean? Typically, those words are followed by a profit warning a few months down the line.
Look, we have seen in August and September a furthering decrease with regard to the interest rates. And I think a conservative management has to take that into account. However, we took swift action in terms of passing on negative rates to our clients, in particular on the corporate side, but also in the ultra-high net worth, on the wealth management. We have initiated other mitigating action. We see from the first 5 months in this bank how much potential is there on the revenue side, but also on the cost side. All in all, looking down the road for the next 3 years, that gives us, with hitting all the goals in the first 5 months, the comfort that we can achieve, despite these challenges, our 8% return on equity in 2022. So therefore, we are confident that we can achieve that, recognizing clearly the challenges. But with the track record we have seen no reason to adjust.
You talk about passing on the costs, and in the release you say you've taken substantial measures to offset negative rates. Can you elaborate on what those kind of measures are?
Well, it's kind of a flower of measures. On the one hand, as we said already 3 or 4 weeks ago, we started to pass on negative interest rates to certain client segments, be it on the corporate side, be it on the ultra-high net worth. However, we focus far more on an even optimized advisory for our clients to change deposits into other investment funds. And we have been very successful. Look at the inflows we have in wealth management, in the asset management, but also in the private bank. A lot of good work has been done there. Also to really make sure that our clients are benefiting from that. We do get a benefit from the ECB tiering, there is no doubt. And we have also, in a conservative way, started to increase the one or the other loan book segment in order to offset. So it's a flower of mitigating measures, and it shows us that there is potential to offset.
Is there going to come a time when all German depositors are going to have to pay banks to hold their balances?
I don't think that negative interest rates in a broad way will be passed on to the normal retail client segment. We have legal restrictions there, and hence I cannot see that. I think it is far more important actually to do a better advisory. And if there is one bank in Germany who has all the expertise and the capacity to advise in terms of moving from deposits to really good investment funds, giving also clients the flexibility, then it's Deutsche Bank.
Can you imagine interest rates staying negative? Are you prepared for interest rates to stay negative the next 5 or 10 years?
I think we have taken a conservative outlook on the interest rates. Therefore, in this regard, we also changed our underlying planning. I think we have, and that is in part of my slides, lower for longer. That is part of our overall plan. Therefore, we are prepared for that, and we need to adjust in this regard our business model. And you know what? We started to do that in July.
Well, and the ECB and the regulators have, in a sense, commended you by, as you mentioned, lowering your capital ratio requirements, your SREP. What does that change for you operationally? Because you still intend to keep your CET ratio above 12.5%.
Well, first of all, it is nothing else than a very positive feedback for the way we have approached over the last, I would say, even 1.5 years. Because at the end of the day, it is a signal of full credibility. Of course, it gives us the one or the other leeway, but we will not change our internal capital targets and those which we have communicated to the market, be it on the capital Core Tier 1 ratio or on the leverage ratio side. We want to stay, and I always said that, a conservatively managed bank. So it gives us comfort that we are on the right track, but we will not change our targets.
Is this the kind of thing that employees will be rewarded for in terms of bonuses?
I think the employees are rewarded for if their performance is in line with that, what we set ourselves as targets. One target is clearly that we have a more disciplined and an even better capital management. I think in 2019 we went into this direction. So I'm sure in the one or the other way, we will also think about the right reward for that.
Are there certain areas that you want to target or pay the most attention to when it comes time?
You will understand that we have today the Investor Day, and there is our full focus on. And after that, we will see how the overall year will finish, and then we decide on that.
Let me ask you about your role or your roles at this bank. You have a lot of responsibility here, and understandably, there's some concern that you hold too much responsibility as the CEO and head of the investment bank. Do you envision holding both of those roles for the next 12 months or further out?
Yeah, I mean, we just did, I think, a material change in getting Fabrizio Campelli on the board in order to honestly monitor and manage the day-to-day transformation of this big program, which we announced in July. So far, a number of people have done that in their day job, be it James von Moltke, Frank Kuhnke, myself, Karl van Rohr. We have now a dedicated person who is monitoring and managing the transformation, hugely important, takes real work away from us in the daily work. That's good. And that means for me, I have more time, much needed time to focus on the business, and that means on the investment bank. And therefore, there is no intention to change that.
You have so much going on, and a lot of executives say they don't look at the share price on a daily basis, understandably. But do you have a goal in mind with regards to increasing your equity value?
Of course, ultimately, I have my goal that, for the shareholders who have been very resilient and very supportive, that we increase our share price. There is no doubt. But I think I want to do it in a sustainable way. And therefore, we always said we need to go through this transformation. We gave a clear path, how long it takes, what the steps are. And that what I can tell you today is we are fully on track. And that gives me the comfort that over time, share price will also recover, will be there where it should be. But that needs hard work, and we're doing it every day.